Good morning, everyone. Welcome to The Modern Market, where every day we discuss all things to do with the markets. That is the stock market, the crypto market, and any other market, including the Robinhood market. Seeing a little bit of a downturn today, but we're not getting too flustered by it. We'll talk that and more as always on the show. Welcome back. Good morning to Legendary, my co-host. Good morning to Hershey, my co-host. Good morning to Diablito, GGWP, Tone World, Como Mansa in the comments, getting in early. We're a little bit late today, kicking off. Good to see people ready and waiting. Let's get into it today. Your headlines for Thursday, the 13th of August, 2026. CPI inflation falls to 3.4%, pushing risk assets higher. Ledge will take us through that today. Does it even matter anymore? I don't really know hugely. So Ledge will talk us through his perspective there. We'll also talk Gen Z moving stocks to sports betting to build wealth. I like touching in on these kind of macro trends every now and again as well to get us just a sense of what is happening on a broader perspective. Various thoughts to share when we get to that headline and I share some of the specific details. We'll also talk SpaceX pushing towards $150, which is 40% up off the lows. Hershey will tie that in with some other incredibly volatile stock price action, with Cerebras tanking 20% on earnings yesterday, whereas Nebius, I think, was up pushing 20% itself, or 35%, I think, at one point. So real huge volatility still in the stock market itself. So we'll talk all those things. And as I said, we'll touch on Robinhood and what's going on there in a little bit too. In other headlines, we have the news that Josh Kushner and Bob Iger will be buying the Los Angeles Lakers for $12 billion. Pretty outrageous to see. 12 billion sounds cheap. Don't know about you guys, but I think 12 billion sounds pretty cheap. We'll get your thoughts in a sec. US government removes requirement for US companies to report beneficial ownership information. Thought that was a pretty interesting data point. Pretty standard for that type of thing to be reported, so not sure why that's got removed. Wintermute plans $1 billion investment in HFT and AI infrastructure to expand into traditional markets. You saw Citadel coming into crypto. Wintermute's going in the other direction. Finance is just finance these days. That's all it is. Finance is everywhere now, including crypto. Robinhood and Lighter partnership will go live today in Robinhood Wallet. SpaceX AI launches Grok 4.6. Apparently it's performing very, very well. Hyperliquid seeks compliant method to bring US perps, according to the information. I think Hershey had some thoughts on that, which I'd like to touch on. Variational identifies 10,000 Hyperliquid power users to allocate rewards towards. If you're an on-chain power user, very likely you have been summoned by Variational if you'd like a little juice in your account to continue trading. We'll discuss the merits of that. Robinhood chain doing over 2 times the volume on Ethereum. Unsurprising at the moment, given all the energy on Robinhood chain. Orange Cat Games announced partnership with Van Eck for Market Forces TCG. Remember, this is the guys who are behind the Pudgy Penguins TCG, and obviously CEO of Orange Cat Games is Spencer, who bought Moonbirds off Yuga Labs. They're in charge of the Van Eck TCG. Pretty cool. And finally, Rec Brands announces a Rect token buyback. Getting into the price action to get you up to speed quickly with what is going on there. As mentioned, a lot of volatility in the stock market. However, Bitcoin will not go anywhere. It's down 0.8% to 63.5. ETH's down 1.5% to 1880. You have Sol sitting at just down 1% to $75. Hype up 3%. So Hype is the mover here, up 3% to $57. In terms of memory, you've still got a lot of volatility on these. SK Hynix up 3%, SanDisk up 2.5%, Micron up 2.5%. SpaceX, as I said, up 9% to 146 now. Nebius, as mentioned, plus 17% to 248. Samsung plus 1% to 185. Intel plus 2% to 101. Nvidia plus 2% to 224. Google down, Meta down. It seems like these things going inverse directions. When people realize that the capex is going to stay super high and that the recipients of the capex are going to do well, then they go up and hyperscalers go down. And then when people get concerned about whether the capex will continue, the the memory stocks and companies like that go down, and then the hyperscalers go back up. That's kind of, they seem to be operating inversely at the moment. Pump's up 3%, Lighter's up 3% ahead of this partnership news. Oracle's up 2% as well. Virtual's up 6% on a bit of a robotics narrative, which is catching people's attention at the moment. But I'll stop there. There's some. Dell's up 11% today. I've called out Dell before, Ledge. If you just want to click through to Dell before I pass it over to you guys, Dell is one of the most ridiculous charts that I've seen in stocks. In maybe, I mean, it wasn't in stocks before that much. Put it on a slide, like on the daily time frame or something. It's just going plus 10%, minus 10% routinely. It's done it like 5 times now already. It's just the most ridiculous chart. I don't know why it's behaving like this so aggressively, but it seems like you just buy any dip and then you'll make money on it. That's that. Something to consider. So look, a lot of things to consider today across the board. Throwing to Legendary first to ask what is catching your attention. What are you seeing? What are you noticing? Then want to come to Hershey as well.
Yeah, there's definitely a bit of a robotics narrative freshing up again. Let me bring up bot strategy, up 20% almost over the last 5 trading days. It's been quite a few movers. Obviously, not only SpaceX, not only the neo clouds, but robotics did quite well too. Then on the drug side of things, you have Absci. I think we talked about Absci months ago or so, which did recover the last 5 days too, up 13%. It's down over the month. It's still up 172% year to date. That is the company which has focused on AI research-driven drug design and drug research, or AI-driven drug research, to put it correctly, with 100 mil, I think, in runway, with Eli Lilly backing them, and with earnings that they reported 2 days ago or so. And I think this is the interesting part. The loss has widened. They are doing well in terms of the runway, but it's obviously a company that is going to burn a ton of money until it has the potential to make money, if it even will get to the point. But despite these earnings, it's up 13%. So the traders and shareholders are not too worried about that. And I feel like that's a completely different set of expectations that you have for a company like that, or even for a company like Eli Lilly, as opposed to the craze of how we are trading the Dells, the semiconductors, the neo clouds, where you might have earnings that are outperforming expectations, but because they're not outperforming enough and they only quadrupled their revenue, the stock still crashes 10% or so. So I think it is interesting to see that other pockets of the market are behaving in a different way, in almost what I would call more normal way, where it's like understandable. Oh, okay, this is an early company. Yeah, they have secured runway. This is more important than the fact that the losses are widening. So for that reason, we're not gonna like nuke it to infinity or to zero.
Yeah, it's just insane, the volatility we're seeing on stocks. I mean,
Dell is, you said it perfectly, like Dell is an absolutely ridiculous chart to look at. The amount of times it is like fluctuating between the 360s or the 380s and 400s. It's ridiculous to see these moves.
Yeah, and I don't know, if you're in crypto, maybe you just think oh, it's just caught in a range or something. It's like, yeah, but it's a 10% range for one of the biggest companies in the world. Like, that's not normal. It's not normal behavior at all. Hershey, do you have a view on this like insane volatility in stocks, and then want to get your thoughts on, I think there's some other things you wanted to talk about in the market that you're noticing?
Yeah, I think it's quite difficult to know if the volatility is going to break out one way or the other. And obviously, we just see earnings getting smashed, like we'll talk about later, with Nimbus and all these other companies. I was in Hewlett Packard, which is the only kind of comparable to Dell in a similar sector, and I got shaken out of that during the massive dip. when when Leopold's fund was getting liquidated, and now I think I bought it at 27 and sold around 44, and now it's at 60. Like, so Hewlett Packard is also running again as well. I think you just gotta hold and continue to sit with the companies that are outperforming earnings time and time again. Even if valuations seem a bit crazy, I think they'll continue to get a bit crazier. And yeah, trying to trade that madness on that chart seems like a fool's errand.
I don't know. I quite like the idea of just buying the dip on Dell almost any time, so long as this is the one thing. In fact, there's a similar thesis that's actually preventing me. Well, actually, not right now because I think the timing's okay. But I think the thing that would mean I would continue to buy the dip is under a Trump administration, then Michael Dell has donated significantly towards the Trump accounts, and I think that preceded a very significant markup in the stock price, or at least at one point. And it feels like, I don't know, this volatility has happened since then, and maybe this is using too much creative thinking, but it feels like this stock is going to do well for his as a consequence, not only as a consequence of his contribution, but at least in part. And so any dip on that, I think, is probably going to be good under this administration. So I'd actually be quite keen to, unless the rest of the stock market also goes down as well. But it's actually the same drawback for me on the longer side of things. On the private investment side, I still rattle through keep an eye out on what's coming through on the echo side, on the private investment side. And there's a couple recently, or one in particular, which had indicated something which President Trump, and you can't be specific about these because you're not allowed to talk about them publicly, but there was one which had named the President Trump kind of not the President Trump fund, but as in the son's funds, as a early investor. And it's in an area of the world which people are saying, well, this is going to be big. It's going to be important for America to be kind of self-sufficient in this arena moving forward. And then the genuine thought in my head is like, okay, cool. Like, I would want to do that now, but under a democratic under a democratic regime, would it be the case that if they see the President Trump's children's fund on the cap table, is that the one that gets favored in the future? And I don't think that's completely out of the realm of possibility of thinking now. Maybe they don't have the luxury because in certain industries you just have to back the best people, and maybe they have backed the best people. But it is concerning to me how politicized things have become, and now the Trump administration has the funds associated with the family have kind of intertwined themselves into American development. I don't know what the Democrats will do as a consequence of that. I think that there will be blowback, in my opinion. I don't know how you can't remove people from a cap table, right? But maybe you can hike capital gains tax a hell of a lot, so that people who win from those types of things don't win as hard. I don't know 100%, but it's been in my mind. Actually, do you have any thought on that?
Well, the other thing that terrifies me when you say the Dems trying to blow back against what the Trump regime has done makes me think, whenever markets pull back, the easiest way to express that has been shorting crypto into oblivion. And so what if they see crypto as the one place that is Trump's playground where he's made the most money ever in his life? And they think, we can't come for these more institutionalized things, so let's just go after crypto because it's tied to his.
Yeah. Well, because the thing, realistically, that's one of the key reasons why Clarity won't pass, right? Because one of the things in dispute is the kind of, I can't remember the exact wording that's used, but it's the fact, it's kind of the self-enrichment aspect where, okay, well, moving forward, maybe no one's allowed to do any coins, but it's kind of ridiculous because they made more money off their coin than they've made off anything in their whole life. So it's kind of farcical. But yeah, anyway, we digress. We digress into the state of the American politics. Ledge, do you have any thought on this? Otherwise, I think Hershey, maybe we'll talk Hyperliquid for a second. Ledge, any other thought?
Only thought would be what that means for us going into the midterms, and if we think that the markets will kind of look at the midterms and the results after to think, oh, do we need to maybe adjust for Dems coming back into power? Because historically, right, it didn't matter too much if you had a Republican or Democrat president, but with all of these involvements in crypto and stocks and companies and how politicized this entire economic landscape has gotten, I think that this time actually might be different, and you want to pay more attention to that, and you might want to adjust your like cash to staying invested, or at least for the short term. Not maybe after the midterms, maybe, but going into the next election then.
Maybe. Yeah, I don't have a strong view on that at the moment, but I agree that it's in the camp of like keep an eye out for signs. I guess we don't really know who the definitive Democratic candidate is yet, or the person that will be the person to take it forward. So let's see. Hershey, I think you wanted to touch on Hyperliquid a little bit and thoughts around its move up, or just what's going on here. What are you seeing? I think you've traded Hype quite successfully over a long time period, and what's your kind of status in positioning?
Yeah, definitely. I exited fully. I think I sold half of what I had remaining at about 67, and then the other half around 58. And that was, a few weeks ago.
After entering from a long time ago.
I've been trading in and out of it, I think a bit more than I should, like in and out at similar levels. But my main purchases were in the 30s, the low 30s, and then I've been kind of just selling out of it mostly. I think at an average around 65 or so, so about 100% gain. And
why did you? What caused that?
The buying and the selling.
Well, this like deciding to sell the majority.
Yeah, I think it just I remember I was joking with someone when I was coming back to London. I was like, hopefully Hype just goes to 70 and then I'll have some money to go play poker with or something like that, as a joke when it was at 50 or 40, and then it just went to 75, like in 2 candles. And I didn't sell very much above 70 because I was a bit caught in euphoria. But I think when it was hanging out in the high 60s, I started to realize that my kind of joke short-term targets had been hit very quickly. And in the past, I've held on to things and been a bit too much of a believer. So the chart looked a bit extended, and I wanted to exit and secure some profit and pay myself for the work that I was doing, let's say, quote unquote. And now when you see it, I actually bought before this announcement happened around. It's kind of an announcement of an announcement that they're seeking the path to approve perpetual futures in the US. And we saw like a little bounce yesterday, and then a pullback, and now it is still bouncing off of around 51 pretty well. But if you just zoom out on the chart, the previous all-time high from last year was around 57, something like that. And so you can kind of see how it's just bouncing off of its previous all-time high level. And while I don't know if it has lost momentum a bit, and so I don't know if this is the end of the correction. It just feels like a good level where people have kind of disengaged from Hype a bit. There are reasons to maybe be bearish, but it's just a good spot for a mean reversion bounce. And so I think I'm still looking to sell this and take some profit again. However, I still know that Hype is a good alt to hold on a multi-year time frame. So you don't want to get too key with your entries, but for me, I think we're not in any rush. We're in that kind of low momentum period where you can take good spots, execute for some profit, and then look to re-enter again. So I bought around 55.8, so I'm only up, not that much in percentage terms, but I bought enough to feel good about the move already.
Okay. Yeah, interesting. One of the things with Hype as well, which we do like, is that, obviously it's a great product. One of the things is, and maybe this is time to just bring up the variational tweet, Ledge, where we mentioned variational are trying to target Hyperliquid. They're offering I think how much money is it? It says that they are allocating towards trying to get.
They're saying a million plus, and 150,000 variational points.
Yeah, so they're making a concerted effort to target, I think, the top 10,000 wallets on Hyperliquid.
Yep.
I haven't actually, and so, you know, they're the next one out of the gate. Light has obviously done a decent job getting some attention and traction and all this stuff. Variational will do the same. I'm just with Hype. I think they always have the buybacks because they're making a ton of money, which always gives you some confidence to buy towards the lows. I think the kind of violent repricing has happened now, and now it's a slightly more consensus. Everyone knows it's a good product hold style of asset, and so maybe we'll attract fewer flows because most people already own it, or there's no immediate big catalyst to violently reprice higher again. HIP3 was a great catalyst, and I think people have come to terms with what it means to now have, the Unitree Chinese IPO is going to take place. We've got the pre-market open on Hyperliquid. People are trading it. You've got CXMT, whatever, going as well on the Chinese market. You can trade it pre-market on Hyperliquid. Okay, Anthropic will come. You'll be, people have got into that routine now. It's understood. It's priced in, I think. So, yeah, I think I have no strong view on Hype apart from what you've just said. You can probably bounce around with it quite comfortably because there's so many buybacks. But the violent move, I think, is done on my side.
Because correct me if I'm wrong, you were in it, I think, a couple weeks ago, but maybe you're out now again. I think you.
Yeah, I mean, I've always got a bit staked actually. Like, so I've got a ton staked, which is non-zero amount, and then the bigger amount is now gone. Yeah, I felt like I was buying high, and I was. So I'm glad I was, you have a lot of confidence with Hype, but maybe it was overconfidence in that particular thing. I was just kind of buying in and out, as you kind of mentioned, trading probably too much. So I fell into that bracket a little bit. I think if you're going to buy and hold for a bit longer, I think the 50s is, you'd feel much nicer, right? Rather than doing that in the 60s. So it's probably nice. And if I was going to do that, I don't mind that idea even right now. For example, just adding to a medium term bag of Hype in the 50s. So, okay, that's that. Yeah. Should we go into the first headline?
Yeah.
Just checking in some of the comments before we get there. Mufasa's checking in. Good morning. Dudify is here. Deblita saying you need a true social special account so you know when Donald Trump sells Dell. Maybe that's what's going on, to be honest, just buying and selling. Shout out to Funky saying it's called the ethics provisions. Yes, that's the issue in the Clarity Act where we just no one can agree on the ethics. It's very telling about the state of the market. PDP Cusco for new commenter. Welcome to the show. Will Republicans lose the House? How can I pit digital coins on the outcome? Polymarket, I guess. Polymarket, Kalshi, 2 places to predict if you wish. 2, that's where you can probably have a clean bet. I'm not sure what the numbers are saying at the moment, but we'll probably check in with those in not long. Or as we kind of go through the summer, we'll keep checking in. Morning to English, checking in as well. Right, let's get into it. First headline of the day, Ledge. We had CPI yesterday. What do we need to know, and does it matter?
Yes, let's take a look. As you said, we got CPI data yesterday, consumer price index. Key headline here is that consumer price is up 0.1% in July. That is in line with expectations. That is putting the annual rate at 3.4%. That also means that we are down from the levels in June, both on an annual basis. We have inflation rates 3.4 and 2.5%. Both are down 0.1% from the data in June. All of that was consensus. All of that was forecasted. So no surprise there, which means 2 things really. On the one hand, it didn't matter for this poly market, talking about poly market, which is the question: is there going to be a rate hike in 2026? Yes or no? We are still at the level that we essentially did see yesterday. Yesterday 56, today 55% chance. That is of $7.3 million in volume on that. So the CPI read yesterday was, as expected, nothing then impacted that rate hike probability. Nonetheless, stock markets did like the news. S&P had a good day, closing in the green, up 0.25%. Nasdaq had an even better day, up a bit more than 0.5% during trading hours. But apart from that, nothing too notable from the CPI. And to answer your question, I don't think that with that result, with that outcome, that it really matters. Just to complete the roundup with some other things, gold is still holding up quite well. It's still at almost 4.4K, which means that it's up almost 10% in August alone, because this is where it started to cross $4,000 again. And also taking a look at the 10-year treasury, that is still holding at 4.67%. It is down from the peak that it had reached, almost 10 bips higher at 4.75. So nothing too surprising to report on that end.
Okay. Hershey, going straight to you, the CPI, is it, what have you thought generally about CPI? How do you factor it in? I know you play quite far out on the risk curve. Is CPI something that you have to keep watching? Have you been keeping up to date with Walsh's comments on inflation and his commitment to it, and how he has not been raising interest rates? Are you factoring any of this in at all when you're going on to Robinhood chain and taking further risk down the risk curve, or do you think it's not a huge part of the picture for you now?
I do think it's hilarious being chronically on Twitter, and so everyone's throwing out all kinds of comments around CPI, and then the classic joke is just, what does this mean for X meme coin that really should have no relevance to what the cost of eggs is somewhere. But I thought this one was particularly interesting because everyone was hyping it as this is a very important CPI. This is the most important CPI of the year, kind of a lot of jokes around it. And then it came directly in line with expectations and didn't really move the markets in the way people were expecting. So I thought that was of note that, it really didn't have the impact that everyone was thinking it would. And for on-chain specifically, I've been very excited about the activity coming back to on-chain, the appetite still being there. And it does feel like we're in a very interesting dynamic where on-chain and select projects can move irrespective of whether majors are moving at all. And you see this big disconnect of, Bitcoin's just kind of flat, bopping around, and we get to finally have, some on-chain activity. So it doesn't feel like on-chain is connected to the moves of majors or CPI or anything like that. So far, I'm agreeing with you where it feels like rate hikes won't happen over the course of the year, and we might just kind of continue to move. Maybe the contrarian direction is just moving within the lines of guidance rather than actually starting to surprise people a lot. But we'll see.
Yeah, I mean, I'm definitely of the opinion that they're not going to move rates a huge amount, and that I would bet on no hikes more than I would bet on some hikes at the moment after listening and following some of the stuff.
Do you like the odds for that on Polymarket? Basically,
what
a double up on 55% there is going to be a rate hike. So 45 on a note, a bit more than a double up for you.
Why is this so even now? I think they dropped like 30%, right?
Yes, it used to be. Let's bring it back up again once.
I mean, I think I was saying no hikes, and then the
80%. So then the no hike was at 20%. So that would have been a 5x. But do you still like it here at a basically coin flip chance?
No, I don't like it at a coin toss. When I said it, I guess it was before this CPI, and I think that would have been a nice time to take it. I'm not super it's actually interesting though, right? Like I think we probably should get more active in Polymarket and see, or Kalshi or whatever, just because there are certain times when we say things that there is a trade to be had on the prediction market, which you can't express as perfectly on a trading platform. And so, yeah, I would have liked that allocation at when it was so non-consensus. Now that it's a coin flip, I don't see the risk reward being the same at all. Although I still think I'm right, and I guess technically you can double your money. It's the wrong. It's just not the same risk reward, right? So I think maybe that's educational on just thinking through risk reward.
Yes.
Yeah. Okay. Where was I going to go with it? Hershey, you mentioned a lot of on-chain activity. Let's go into the stuff I think you were going to talk about, Robinhood chain. You had some data points, which maybe we've spoken about on the show before, but you were thinking through why you are still allocating, or maybe not still allocating, but have allocated on-chain and kind of going to be unmoved when it comes to these other data points at the moment. You've picked out one data point that is kind of solidifying your thesis. What did you want to share?
Yeah, do you have that chart? Yeah, so I mean, basically, I think you guys talked about it on one of the shows a couple weeks ago, right around the start of the month. But Robinhood chain has gotten to these metrics in the first month faster than any other L2 ever has. So it is really quite compelling. Obviously, there's a lot of doubt around the sustainability of a new chain because we've seen this a million times. But I think it is compelling that it is the fastest to get to these metrics. So that is already novel. And if this was Arbitrum or Polygon or some chain that didn't have any other externalities, maybe you wouldn't think that this was a specific anomaly. But they do have the largest retail user base in the world, and it is just a massive behemoth company behind this. So it does just kind of line up where the math is showing you that they're starting at record pace. You see Vlad responding to Beeple tweets, saying that he's going to save NFTs. Obviously, like I don't think he's going to do any of those things specifically, but I feel like the community overall has been quite loud about how Base and Coinbase should have just been a little more interactive with the community in the ways that they wanted to. And it feels like Vlad is already showing that he's doing that. And so for me, that's a reason to stick around. And so this is one of the first kind of big pullbacks we've seen with some of these more mature assets on Robinhood, like stockbrokers, some of the other memes. And so I think that continuing to stay here and continue to observe and play around in it is definitely plus EV. And I've been much more active on FOMO as well. And I think that FOMO is just an incredible new variable to add into this on-chain season where, if you miss a coin that's on BNB or on Robinhood or wherever, it used to be like, well, I'm not going to pay attention to this because I would have to go find that wallet. I'd have to transfer money over there. FOMO just makes it so easy to play wherever the puck goes. And so I just think that it's going to make people continue to, just experiment with the new thing. And so I've just been trading on Robinhood through FOMO, and I know the fees are super high, and so better to buy and hold rather than trade consistently. But anyway, so the specific take that I have, the one meme that I've been buying is Tendies, which is very far out there on the risk curve and is a small percentage of my portfolio, but I just think that there will be $500 million, $1 billion coins coming out of this Robinhood ecosystem. And I think that the one that I've seen that has the best potential for that is Tendies. And so far, I'm definitely underperforming other coins that have been bought over the last 10 days. But I do feel confident that it's worth finding real meme communities, real kind of contrarian bets here, and that they will pay off, or they have the likelihood to pay off, but we'll see. This might go to zero, but I do feel I don't know, different type of way about it.
I think that's That's one of the core questions people got to ask themselves. I think what you just mentioned right at the end. It's like, do people have the belief that things could go to 500 or a bill again? Now, we've been through a whole period of time where there's a lot of logical reasons why they would not. For example, once upon a time, they could go that high, but that was during a period of time when it was not possible to one click create a coin in 5 seconds, and there were tens, if not hundreds, if not thousands of coins being released every day, every week, vying for people's attention, attracting people's liquidity. So there's a very real reason why we have stopped being able to have those assets that have been able to run that fast. It is logical to think that, you know, it's not going to happen anymore because there's just too much competition, too many people vamping other people in terms of liquidity. But the question is, do you believe if the right on-chain environments exist, if the general macro stars align, do you think it could go higher? That is definitely a non-consensus thought right now, because so many people are jaded and broken by things not running higher and then losing money, whether it is VC coins starting high and then ending up super low, or meme coins starting low, going ultimately not very high and then falling back down after the original cycle where they did go super high and then things never being able to get there again. If the answer, I mean, so you're taking a non-consensus bet that it can. Like, it does have the potential. This stuff is not going to just stop at 30 because you've seen something underlying in the metrics at Robinhood chain. Maybe you've seen something underlying in the macro situation, which suggests that might also be helpful. Maybe even, maybe if we pull up the next headline, which I was going to talk about in a little bit, but we can carry on this discussion after. Maybe you're seeing data like this coming from Eric Balkunas saying Gen Z is moving money from stocks to sports betting in wealth plans. 52% of them have redirected funds to sports betting, and a quarter of them treat sports betting as a deliberate part of their long-term financial plan, according to a survey from Betterment. Maybe you're seeing data like that and saying, do you know what? Maybe these guys are ready to, maybe it's been enough time since the last time that there will be sufficient people to come in. Now, I'm not saying those people aren't going to come in and get completely destroyed by the way that the efficiency of these markets now, but there is a reasonable chance that maybe some additional capital is coming in that hasn't come before, and all of those factors are happening. So, I mean, we were talking about this on the show yesterday, talking about like, look, if there's going to be a time, you would guess that it's got to be now. Hershey, how do you respond to like some of those additional concepts? Is that something you're taking into account as well, or are you just purely taking it on the Robinhood basis, or what is the thought?
Yeah, I totally agree. I think that to some extent my worry with the current on-chain season is that I wouldn't say that the right things are being pushed, and I wouldn't say that like the overall stability or health of this on-chain season is that high. I think that almost all of the memes, the things that are being talked about on Robinhood chain are going to go to zero. I think that people who are saying like for instance, the cat that you bought and you're up a pretty good multiple. I mean, you're up like 7 or 8x last night. Maybe it's 4 or 5 now. People saying that is the next $4 billion whiff or whatever. I'm happy to be proven wrong. But personally, I think there's no way. That's impossible. That's ridiculous, because if you were there when you saw, and I know this sounds crazy to be so passionate about meme coins, but like if you were there when WIF was in its beginnings, if you were there when Farcoin was its beginnings, Troll, etc., there was a reason why that was differentiated. There was a reason why that meme had been around for 10 years. There was a reason why, like the cat, no one uses that. I don't know what that is. Like, it might have a great cabal. It might have a great team. It might go to $1 billion. That's all super possible. But anything like that is going to zero on a 6-month time frame. But within that, there are gems. Stockbroker is one that isn't a meme coin, but has quasi-memetics attached to real interesting liquidity and DeFi levers. And that one was one that I faded. And I think that one could be a good one to buy in a dip. But But I think within the sea of what I think will be dead in just a few months, there are going to be some gems that come out of this. And this is that moment where you can still actually be early to, a chain that has tens of millions of users behind it that in a real bull market could truly do some silly stuff again. So
yeah, I would agree with you on stockbrokers. I want to hear Ledge's view on this kind of risk appetite in this arena. I agree on stockbrokers. That's clearly like an actual quality builder doing something novel, doing something interesting, deservedly being the winner. And I guess you're going to get a lot of either copycat or just trying to tail on that success to some degree. But when you say about gems, I just want to clarify for some people who are more proficient in crypto will already know, when we say gems, it doesn't necessarily mean it's a gem which you cherish forever. These are things where you're just expecting macro conditions and micro conditions to kind of be in your favor, and there'd be a tailwind for you to buy something and then sell it later higher. These are not things that people have a deep conviction in forever and ever. Whereas stockbroker might actually be building an ecosystem where there is some type of sustainable product and there is some type of organic demand and there is some kind of revenue generation. Like they actually might be moving towards those things. You need to double click on them yourself. But, when we're talking about tendies or cat or any of these other things, clearly we're on the more speculative side of things. So
agreed. Yeah, I'd say anytime I think in my entire time in crypto in 5 years, and I'm still on the far end of the risk spectrum within that, anytime I tried to hold an asset for long-term capital gains, that was a mistake. Anytime I thought I want to hold this to get to the point where I'm going to pay less taxes on it, I would have kept more money if I sold it when I was paying more taxes on it. So I think
pay your taxes, guys. That's the lesson. Pay your taxes. I'm sure you paid them anyway, but the point is,
well, I paid them anyway.
Pay them sooner. Take the profit.
Pay them sooner. Don't be afraid of the taxes.
Pay more taxes.
Having taxes is a great outcome.
Exactly. Having some taxes to pay is a blessing.
Yeah.
It sounds so European.
Yeah, exactly. All right, a couple of comments before hearing your thoughts, Ledge. We've got a bunch. As soon as we talk memes, people want to say things.
You hear what I'm saying?
Diabetes saying, didn't some people make a big bag with the GameStop stuff on Robinhood? I agree. People are fond of Robinhood. Mufasa saying Robinhood deleted the sell button. Never forget. Oh yeah, that was. People have forgotten. You say people should never forget. They definitely have forgotten that. I think they prevented people selling their soul or something at one point when stuff was crashing. English saying Tendies is favorite risk reward coin on Robinhood right now. Lots of tastemakers on CT like it. You are a tastemaker, apparently, Hershey. Hope you enjoy that term. Tendies feels like MOG in 2023. It's funny how, we just have to go back to the past and be like, oh, this cat is like this cat in the previous cycle. MOG is like this. Different assets, just to get people's imagination going again. English thinks, there is a world where Tendies and Cash Cat are above 1 billion in 2028. This is all within the realm of possibilities, I think.
But size very low. In terms of
but size very low. Okay, let's see what other comments we have here. English, once people know it can get that high is when the trade is overcrowded. Mufasa saying home run hitters have a lot more strikeouts and a lower batting average than those who seek out singles and doubles. That is correct. You could crush yourself here going for the big stuff. Toneworld, not knowing the cat meme is actually super interesting. I thought it was like a common meme. To be honest, I don't know if people are psyoping ourselves by some people are acting like it is a meme, and that maybe you just don't know about it. Maybe Hershey, you just don't know about it. It's it's the Chinese. It's a Chinese meme that you're not familiar with. Potentially, I don't know.
Yeah, I might need to do some more research. Toneworld is actually pretty good with memes from what I know of seeing them on the timeline. So to be fair, seeing that makes me want to go check the check the timeline a bit to double check that one.
Some Robinhood haters say Robinhood was the enemy back in the GME AMC days. OG Gaming, Quantum coming in. Daily reminder that Robinhood delisted Solana at the bottom. Yeah, people that don't forget. I respect our audience. These are people that won't forget. People have been here for some time. Experienced, seasoned community members. Very high respect. Let's get you in here. What's your view on this kind of riskier side of the stuff? Obviously, we know that this is a small part of people's portfolios. You're not going to bet the house on a cat meme, because that's how you disappear from the industry and can't survive multiple cycles like we all have. But what's your view on the Robinhood energy?
A couple of thoughts. This is the cat. Like, I know it. I am surprised that I have seen this meme, because typically I'm the least knowledgeable in the current cycle when it comes to that. B, English was saying that yesterday, right? The Robinhood season can be sustainable because people are sports betting that much, and that also seems to be a sustainable, quote unquote, sustainable trend in the sense of that they have been doing this long term, or are doing this long term. But there's two elements here. One, the sad part is, if you continue reading these articles, or they're quoting a guy who's saying he's spending more energy into betting than he is into investing, and we're talking about investment funds. And then the question is, okay, what do you do with the money you made from your investments / sport betting? And this guy is saying, I booked a whole vacation thanks to the Carolina Hurricanes this year, which sounds insane to say out loud. So I'm like, okay, this is an investment fund. If this is an investment fund, you're like supposed to, keep what you have made, compound your earnings, put it into the S&P, whatever, but don't like blow it on a vacation. So not even the definition of investing becomes completely absurd if you're just like betting, making money, or investing in a stock, it goes up 10%, you take the profit and you go for dinner. If this is your long-term investing strategy, it doesn't matter what asset you're in, or what you're using, if it's stocks, memes, or sports betting, because it's never going to compound if you spend all the gains. The part that I didn't know, and then it's surprising me, that's going back to the sports betting side of things, is that this Supreme Court decision back in 2018 was 8 years ago. Before that, basically, betting on football, basketball, baseball was banned in most states in the US, unless you were grandfathered in, like I think Nevada was, for example, and it was already legal. And that was only overturned in 2018. So it took 8 years from that Supreme Court ruling, which paved the way for this growth that we've seen in sports betting, to getting to the point where we are now. So that was quite a long journey. It's almost a decade that it has seen this explosive growth. And now that it's more common to do sports betting than to never have done it, if you look at like adult statistics in the US, that on the sports betting side of things, I think what is also helpful, what I have certainly underestimated, and again, English has made, I'm glazing English today, in the comments a couple, I don't know, weeks or so ago, was the change of the X algorithm, that it does feel that you're like more connected. Even myself, I haven't been posting that much lately. I'm like trying to remind myself that I need to get back into being more of a regular poster on X. But even when I do it, it feels like, oh, people who I haven't seen in a while are interacting with my posts. Like, this circle of friends seems to be pushed back into the algo. And that obviously is helpful for the meme communities if you feel like you're posting about cat or attendees or whatever you are. And then there's the people showing up who you feel are part of the same community. So I do think that the X algo and all of the other things which we have talked about, but also the X algo specifically, plays a role that we are getting a nicer season than what I would have expected it to be initially.
Interesting. Okay. A couple other comments in the chat. Turnwell saying, I was about to say that it's all over TikTok. This thing, we're not on TikTok, guys. Get on TikTok. Hershey, you're the youngest one out of us. Get on TikTok, man. That's where the stuff is happening. Mikhail saying, since Coinbase has been villainized, Robinhood is clearly benefiting from it. The bar by Coinbase is so low. I actually agree with that a lot. I'm a big Coinbase bear because of how awful the customer service is and just how ridiculous a lot of their product decisions are. And I just think Robinhood did some dumb stuff, but Coinbase do so much dumb stuff that people are like, okay, cool, like Robinhood's fine. And it's like, well, they weren't, obviously, at the back end of last cycle, as many of you guys just mentioned. But the bar is just so low, isn't it? So maybe that's the point. Overarch coming in. Any new meta has provided great short opportunities while still in a crypto bear. Robinhood may be the exception. Yeah, Yeah, would you go short anything now? I'm not sure about going short. We're obviously short SpaceX post IPO. I don't like being short right now after learning my lesson earlier in the year, but the SpaceX short worked nicely. Want some more IPOs to come out before I consider that again. Okay. One final headline for the day, I think, before we close out. Just got a couple minutes, Hershey, so maybe we keep this one fairly brief. Let's get people the information that they need on the stock market. So it's just really volatile moves over and over again here. We've got SpaceX pushing towards 150 after lows around 106, almost a 50% move, 45%-ish move on SpaceX. And then you have Cerebras tanking 20%. We saw one other, who was it?
Nebius.
Nebius up, down 20% as well after earnings. I think it was, no, sorry, up 35 yesterday.
Yeah.
So just give us a quick hit of what you think is going on with these few assets specifically, and then what the general kind of thought about this type of action is.
For sure. Yeah. I mean, obviously the volatility is just increasing everywhere, as we continue to say, and the numbers are staggering when you see 550 billion market cap added in the last week. But with SpaceX specifically, I mean, I remember or whenever we were having the Modern Market dinner, we were talking about SpaceX and where it would be a buy, and everyone was saying, 100 would be a great number, under 100 would be a great number. I think even one person in the circle we were in said, I think 100 would be a great number. And I said, didn't it hit 107, yesterday, or 105? And when you're thinking about that on a bigger time frame, the difference between 105 and 100 is, essentially nothing in terms of the upside. And so I think everyone was continuing to just cheer this lower into unlocks, which we've seen can consistently be a sell the news or a buy the news rumor of, okay, we sold into unlocks, but now they've happened, and they're not going to sell down here. They're probably going to let this mean revert. So it makes a lot of sense that this bounced from the SpaceX perspective, but they've added some revenue, but I don't think their valuation is still massive, and so TBD on whether this will continue. I think that it's still worth just kind of paying attention to it, but there's no reason to ape into SpaceX here, in my opinion. I don't know if you guys are taking a trade. And in terms of Nebius, that's how you say it, it was fascinating to see like OSF and Mando, they both crushed this trade. So there was a lot of people on the timeline talking about it going into the earnings, and they killed it, with that 30% move up. But when you see these companies just smashing earnings like this, that's the volatile market we're in, where it's going to get re-rated super high. And on the flip side with Cerebras, their revenue came right around in expectation. But I believe the reason that it died in after hours is the longer term revenue from the contracts they had in place started to shake and went down. And so even though they're coming in currently on expectation for revenue within the AI market, so much is priced into these long-term backdated agreements with all these other companies. And so when you see that start to falter, that's, the wheels coming off the bus on a company. And that's why you see it dying here. So I think what you can see from this as kind of a mental model is if a company is really going to smash every element of their earnings, you're going to see a re-rate higher, but you can't really miss on any element of it. Even if you kind of come good on the main number, people are looking further and further down the tail risk to see a reason to sell off any asset right now.
Yeah, good stuff. As you say, incredibly volatile at the moment. So we actually have I have no positions on these at the moment.
I still have Nebius. When you bought the dip when you talked about buying the dip on the show, I bought it, and it's so absurd. I held it. The Nebius went down further, and going into earnings,
like 15-20%.
Yeah, and going into earnings, I was down 10%. I was like, yeah, I'm gonna hold it into earnings, and then like the day is done, and on a position that you were down 10% the day before, you suddenly up 26% or 24%. This is absurd to see this amount of volatility.
So what are you gonna cut her?
Probably not.
No, you like
I think I like it. I know that I said that, you know, when you have 20% or something, or 30% in this case on a day, I'm gonna cut it. But I kind of like it. I kind of like it right now.
Okay. Yeah, pretty good. Great.
In terms of trading these moves, I see Mando continue to talk about grid bot trading. Have you guys looked into that at all? Because he keeps saying that he doesn't know why anyone else isn't doing it, given how much money he's making with it. I guess it's just leveraging AI.
Yeah, we've said
talked about
it's
it on the show, and I think it was NDB in our Telegram who was sharing a couple more details on how grid bots work and what he'd suggest looking into. Something that's still on my agenda to do.
Yeah, worth looking into it. Add it to the toolkit, I think, for sure. Okay, Overarch saying in the chat, only thing to save base is a fat stimmy. I don't even know if that can save base at the moment, to be honest. People just sell it. Mufasa, great trade, still holding SpaceX at 112. That is pretty good.
Nice.
Pretty good. Virtuals might save base. Don't think that either. I think virtuals have tried to save themselves a bunch of times, and they're pretty good at reinventing themselves, virtuals, maybe coming with a bit of robotics angle now, but have had a couple of bites at the apple of like trying to create product market fit. They seem to have pretty good standing, as in they keep getting given more chances to continue. So let's see. We had the founder on a while ago, smart guy. Interested to see what they do next. Right, guys, good show. We ran a little bit over as always, but that is the show for today. Great to chat. Got some ideas for some trades, I hope. Although generally, to be honest, I'm not. You know, I'm waiting for a spot here for me. You know, I know we do a daily show, but it doesn't mean you need to take a trade every single day. I think that's a fair point to make. Thanks to Legendary for co-hosting. Thanks to Hershey for co-hosting. As always, thanks so much for joining us, whether you're in the chat, whether you're in the Telegram chat, within the YouTube chat, or whether you're just streaming along somewhere else or joining us after the show. Hope you have a wonderful day. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.